sanctuary if you're ready tonight. I know that it's all so heavy. Won't you let me inside? 'Cause I could be your sanctuary.
What's up, guys? Hope everyone is doing well. In today's video, I'm just going to be resuming my typical updates of Bitcoin, Ethereum, Cardano, and the rest that I usually go over. But anyways, just go ahead and get it started here. First chart I'm going to be touching on is this monthly update for Bitcoin. I was messing around with this. All of these indicators that I use, they appear in the top left if you're interested in checking them out as I go over this. But I was just messing around with them, took some things off, some certain ones, just to kind of get the screen to look less clunky. And I personally would say this is definitely an end-all, be-all chart. And by that, what I mean is, of course, most of you, if you're already familiar with the content, the pink vector candles, which is what they're called. By vector, I mean they orient, or whenever they print, like for example, pink. Obviously, you can clearly see on here is oriented towards the lows, turquoise towards the highs. The reds and the greens are kind of buffer zones, or leading into a major dump or leading into a major pump. And then that paired with the 350 daily moving average band, if you want to call it. So the pi cycle Bitcoin high-low indicator, and then also the red and the, just to reiterate, the red and the green candles are part of the trader's reality indicator. Pink and turquoise are part of the RSI bars, RSI candles indicator. But what I want to specifically point out is, so if I just go ahead and actually take off the actual candles here, just to quickly show the white and the black DMA moving averages, you can see if we go all the way back to just roughly June, May of 2012, this is when the white DMA crossed above the black and initiated this bull run. That was the very first time that happened, and the first time that the white crossed below the black was right here back in October to November 2011. So realistically, well, I mean technically that would be the first bottom of the double bottom that is the phase one, this being the what I'm talking about from 2011 all the way to 2017 or 18. That high around 20,000 would have been the second cycle overall for Bitcoin. That led us up to the super cycle high of 2013, or the super phase high. Come back down, we see the white cross below the black once more, and we see the white come back above the black from around October to November of 2015. We had this bull market for the phase two of the cycle two. Then we enter going into cycle three, phase one. We're seeing this double bottom that I mentioned earlier back here from 11, pushing into 12, leading into the super cycle. We see the white DMA, or the moving average, go below around July, August of 2018. We enter our pink vector candles indicating a low, also further evidentiated by the DMA band right here hitting this kind of basically the golden pocket range, and then also getting this pi cycle low printed as well. We see the white cross above, we have this relief rally, then we come right here in this area. I'll take away the candles once more to show how pretty much just fizzled out, went sideways according to the moving averages, but we did briefly cross below the white going below the black during the black swan event of the March crash, lining up with the COVID pandemic and whatnot. Then we finally saw the white come back above it, more specifically in April leading into May of 2020. We had the first parabolic movement of leading into 64,000, which would be the first bullish movement of the current cycle three's super phase or super cycle that we're in. Made this double top right here. We came down around April to March of 2022 is when we saw the white moving average of the DMA cross below the black once more, as I've pointed out every single time. Same thing is just happening here. Now we have finally seen, and I'll zoom in here to more clearly show this. Let's take away the candles real quick, but you can clearly see that we crossed above, see right here, the white above the black, April of 2023, April of the current year. That is what lines up exactly with the candle once we touched approximately 30,000 or approximately 31,000. And also to further evidentiate that, so the purple dots you see here on the chart are not a part of the DMA band, but are a part of the pi cycle indicator. But along with the oscillation of the black and the white DMA, so the moving averages, we see not only those cross right here in October roughly of 2015, and also back here in around just April, May or so of 2012, we are also begin to see the candles close back above the purple dotted, and I actually forget what these specifically are. So it's we have the long or the low long moving average and the high long moving average of this pi cycle indicator. So again, that we can see that is just essentially triple confirmation here, factoring in the pi cycle, the vector candles, and the DMA band. Again, we see the same thing right here, October of 2015. We see the same thing right here for May of 2019 for the relief rally, and essentially stayed above it the entire time, except outside of this brief moment of the March or the COVID crash. And that is what we have seen right here for our current bull market as well. You can see we've finally, previous two candles, also well, technically still the current one we're on. We still have about 12 days left in this current monthly candle. You can see both of these are closed and opened above, and the going back to March closed above the low long moving average of the pi cycle indicator as well. So I mean this is really about as foolproof as you could possibly get, in my personal opinion, that the bull market, maybe it's a relief rally. I personally believe it's a full-on bull market we're heading into. Again, just to reiterate, I believe we'll see a very similar movement to basically starting around from around August or so of 2020, leading into when we hit 64 to 70,000. Either we'll get that double top or we'll just get a single top, and then we'll enter into the next bear market, which will be similar to 2013, December 2013 right here, leading into around August of 2015 in order to adhere to the phase cycle system I use. If you're new to the content, first card linked to the beginning of this video. The second card, it's a two-part series where I go in depth breaking down my theory on the oscillation of Bitcoin's price over its entire history. But to further evidentiate and affirm or confirm this monthly analysis, here's a weekly chart where I'm going to go over the RSI. I spoke about this chart. You see the price portion of it in my previous video for the first time. Just to quickly reiterate, either we will enter into this black fractal pattern, which once more is adhering to my phase cycle theory, assuming it ends up being accurate, or let's say I'm wrong, or the bear market's not over and we still have one more low to make, or just something along those lines. We'll enter into something I believe similar to this pattern right here. As I referred to it in the last video, I look at it as just an inverse bull flag. Clearly you can see this would be of a bullish megaphone variation, so an inverse bullish megaphone flag, if you will look at it that way. But what I wanted to point out here is I just further elaborated. I've been going over this RSI essentially on multiple different charts for a long period of time at this point, but I just want to again clearly point this out once more just to further validate that previous monthly chart. So it's pretty clearly painted out here. You can see with our black circles or black ellipses with the yellow filling, you can see right here, once we cross the threshold on this RSI value of around 54 on the dot to 57 on the dot of RSI values. After we got our lows set on the RSI, we hit that underwater zone, just lining up with the ranging of the lows. Once we broke into this 54 to 57, broke above it, you can see right here, relief rally. We had this, double bottom right here, which is just inherent to the price harmonics of this, what we're looking at right now being the phase one of cycle 3. Then right here after our COVID crash or the March crash, again, just briefly touching this underwater zone in March of 2020, we come up, we oscillate just right above this range. Let's just fast forward to right here. Again, like I said, I believe we'll see something similar to how we performed after March leading into this double top, which is why I have this fractal pattern here. You can see it looks nearly or essentially identical. You can see how we are coming down right now, and we are testing the upper portion. Previously, we did come down to about 54, to be specific, 54.77 as an RSI value. So whether or not we'll, come down to perhaps that exact same value, maybe just close to it, maybe around 55, 54.5, I don't know. Obviously, like I said, just approximately around that. Maybe we'll just come down and we'll test around 56 or 57. Maybe we'll come even lower and we'll test kind of, the bottom portion of this ellipse at around 51 or so. Maybe we'll even come down to 50. Maybe we'll go even lower, and it would still not necessarily mess with the overall structure of things going forward here. But if we just take it back just to further point out over Bitcoin's entire history, this pattern playing out. Let's see, we go back to the retracement of the super phase of cycle 2 going back to 2013. So this circle right here lining up with this bottom, this local bottom right here, is what would, in terms of my theory, is what would technically line up with our bottom set right here. Obviously, just to reiterate, they clearly do not look identical nor really similar whatsoever, but it is due to the fact that the cycles, the phases are lengthening over time. The bearish downsides are lessening and the bullish upsides are decreasing in terms of their percentage drops and their percentage gains. That's why they're not going to look identical, or perhaps not even realistically similar over a given period of time. You can see right here, very important, we retraced onto it, had this final parabolic move, which again, so from right here at this circle to the high we set in 2013, this would be what we are heading into now. Just now we're in cycle 3 instead of being in cycle 2, which is what I'm going over right now. So let's come to after we had our double bottom set right here. Back in 2015, we set this final bottom. Technically, kind of look at it as almost as a quadruple bottom, but what I mean by double bottom, just to quickly point it out, is right here, and we form an M to kind of make that double bottom. Once more, just to point that out. You see right here, once we broke above 54 to 57, the entire bull market oscillated above this range until we finally hit our upper range of around 94 to 99. So basically just 94 to 100 on the RSI values. You can see we retested it right here. Each of these lows, these most prominent lows, we retested essentially. And right here, we just eventually started to not necessarily retest it anymore. So if we go all the way back to right here, June of 2012, just also remember these are not this one right here of July of 2013, but May of 2012, June of 2012, and then right here, February, just end of 2015, leading into the beginning of 2016, and then these three right here also line up with those approximate, about maybe like bubbles of 2 months ranges that I was going over on that monthly chart. Now I'm just, again, going over it on the weekly. See clearly the same thing right here, June of 2012. You see we got rejected at it right here. January of 2012 had this final. So what we would make right here, what we saw was this double bottom right here, and then we went into the bull market, or that super cycle or super phase. See, we broke above it right here, stayed above it the entire time, similar to obviously right here, as I just got done going over the 2016 to 2017, 2018 bull market. And even if we go all the way back to just shortly after the inception of Bitcoin, you can see right here the very first cycle of Bitcoin, which was essentially just almost borderline straight up. You see how we clearly oscillated right here above it, similar to the previous two periods of price that I just got done going over. The other thing that I just wanted to quickly touch on was, again, I just want to update this MACD right here. You can see how we are kind of just on a downswing, as I did mention in my previous two videos. Quickly go over this bull bear power indicator once more. See, we're still just continuing to come down. You can see how we're kind of slanting out right here on this indicator. Whether or not we continue to come lower and test this trend line, like I mentioned in the last video, we're just going to have to figure that out in the coming time, just to go ahead and say, I don't really think that whatever this next drop ends up ending at. I don't think it will take any longer than going past next month. So June, I think this local low that we are coming into, whether or not it is according to this chart. So if we zoom in here on this daily chart, whether or not it is where we've already set right here on about at the lowest wick low 25.7, or rose to where the candles close around 26.6 thousand and 26.8 thousand. Whether or not this is going to be our low, we're just kind of, as you can clearly see, we're just going sideways basically right here until we finally go back upwards. Or we have, like I've been saying, we're going to see one more downside here to maybe 23 to 24,000. Maybe we'll sit here for a little bit and then finally go back up, or maybe we'll come back down. Maybe we'll even sit here for a little bit and then we'll come down to more around 22.5, or just kind of dig a little bit more into the $23,000 value. But as I was saying, I don't believe whether or not we continue to go lower or whether or not we continue to go sideways for a little bit longer within the local low range we've set so far, going back to May 12th. I don't think it will last any longer than going past, like I said, June, so next month. Again, just to point it out, this range that I have been talking about, so specifically 22.6 to 24.5 thousand, lines up with the golden pocket range of the Fibonacci retracement taken from the top of our local high at realistically $31,000 approximately, all the way down to our absolute low, which is what it seems right now. Like I said, it could possibly not be. If we end up falling through with this pattern right here, we could even go down to 12 to 10,000, although I just don't really see that as being definitely not most likely, or really even realistic at this point. And just like I said, thinking about that monthly chart and what I went over on that weekly chart just not too long ago, realistically, like I said, it just doesn't really make much sense for price to go that much lower, considering what's more that monthly chart. But this Fibonacci retracement does further, just to reiterate, validate us coming down just a tad bit lower. Let's say we do that from around the median of where we've been basically going sideways at since May 12th. Let's say we just come down to around the 50 EMA, which is this white estimated moving average right here. Let's say we go down to this first dashed line. We're looking at around 8% more towards the downside. Let's say we come closer to the 618. That's going to be around 11, so 12% basically. Let's say we come to the 0.55, which lines up nearly exactly with my other dash trend line at 22.6 thousand. That's going to be 16% more towards the downside. And let's say worst case scenario, we come down to the 0.5, kind of, wrapping up where the golden pocket range I use is. That's going to be 18 to 19% more towards the downside, hitting around 21.8 thousand, or around just $21,000 approximately. Let's say we do come down to that point, we could likely see some wicks to 21,000 more closely to on the dot. Again, like I mentioned in my previous video, I myself am personally prepared to see a drop as low as to 20,000. Personally, if we start to lose 20,000, then I believe that is going to, like, if we start to close candles and open candles on around the, no lower than the 4-hour, but more so me personally around the 12-hour to the daily and higher, if we start to do, so we close and open candles below 20,000, that's likely going to start affirming either a retest of our lows back here that we set from around November of last year to January of this year. So around 15.4 thousand to 17.7 thousand. If we then begin to lose that, closing and opening below that on the time frames I just mentioned, then that is going to, in my opinion, start to validate that $12,000 to $10,000 price target, like I have painted out and showed earlier right here with this inverse bull flag of the bull phone not a bull phone, a megaphone variation. I suppose it wouldn't necessarily be wrong to call it a bull phone, but anyways, that wraps up everything I wanted to go over here for Bitcoin. Just to point it out though, we are, as you can see right here, so if we look at this estimated moving average right here, this darker blue or purple one, this 800 estimated moving average, you can see we've been just as we've been going sideways here, we've been waking up to it, basically just bumping our heads on it. Right now we are below every single one of the moving averages apart outside of this 50 EMA, obviously. So this isn't looking good as well. Again, just to reiterate, I personally think that we're more likely going to see a further downside than this being our final local low before we head towards either this is our final pit stop, like I mentioned in the last video, just to go back, we'd be similar to around right here. And also, just let's go ahead and take off all of these real quick just to more clearly point this out. As you can see, we printed right here 2 turquoises, and like I said, if my theory is correct, we're about to head into a similar bull market as I'm going over right here with my cursor. You see we printed 2 turquoise, 1 brown. That's what we were seeing right here. 2 turquoise, 1 brown. So again, either we are right here and we are meeting our final pit stop currently, and we're about to begin this movement of this black fractal pattern right here, or we are going to find our local low right here, and then we'll head to this yellow range of around 32 to 45,000, sit there for a little bit, and then we'll finally begin this parabolic movement associated with this black fractal pattern. But here for Ethereum, it's still just slowly, I mean, borderline going sideways, but with just a slightly downwards orientation. We are coming down, and we have been with the last round 5 candles going back to May 11th, so similar to that candle I mentioned with Bitcoin not too long ago. We are just resting on top of the 50 EMA. Obviously, if Bitcoin continues to go lower, Ethereum will likely go lower as well. The first price target I'd be looking out there for this personally would be around 16 to 1700, if lower on the 18 EMA around 1500. So realistically, 15 to 1700 is what I'm broadly looking out here for Ethereum if Bitcoin continues to go lower and Ethereum follows in suit in accordance to that. Here for an update on Cardano, you can see we've kind of just realistically just been going sideways with a slight upwards movement here recently. If we do continue to go lower here, obviously Bitcoin pretty much just controls the entire cryptocurrency market, as I'm sure most of you are aware. So if Bitcoin goes down, Cardano will likely go down. Perhaps it won't, because it's not perfectly correlated. Everything outside of Bitcoin is not necessarily perfectly correlated with Bitcoin. A lot of the times you'll see some altcoins go up while Bitcoin goes down. And then as Bitcoin goes up, then you'll see that downwards movement that altcoin needs to see, and it's just slightly inverse to each other, but still essentially correlated at the end of the day. If Cardano starts to significantly lose the volume support 34 cents, that's not necessarily going to be looking too good, but if it does lose that, so 34 to 33 cents, the next area to look out for, I personally would be looking for 32 all the way down to 28 cents. If it loses 28 cents, that's perhaps Bitcoin's going down to 20,000 or below, and then worst case scenario, like I said, 12 to 10,000. Here for the SPX, we are continuing to see this bearish divergence I've been mentioning here recently. Just to point it out once more, going all the way back to here. So this goes all the way back to February, beginning of February of this year. If you take a look here at the RSI, you can see that we've been going downwards on the RSI, trend-wise ever since then, but the price has been going upwards. So we're still just continuing to print bearish divergence there. We're in this red resistance zone, which I'm looking out for. If we start to significantly with volume support close above and break out above, realistically 42 to 43, but especially 4,500, then perhaps I'm wrong. But just to quickly reiterate, if anybody new is watching, I believe we're heading into the next iteration of a 2008 market-like crash. I think it's likely going to be far worse than that previous one, just considering the fact that everything's likely going to be replaced with blockchain solutions soon, and I know a lot of this old stuff and the way that we've traditionally known everything's going to have to, in my opinion, die off. But it's also going to be very important for us to see here on this MACD right here start to break out above this yellow box that I have right here. So right now we're not really seeing that. It's been staying below this. I mean, going all the way back to April of 2020, and realistically going all the way back to March of 2016, which goes all the way, actually, It's actually been below that, and this is the wrong time frame. So the monthly is what I needed to point this out on. So you can see how for going all the way back to May of 2020 when we got this final upburst, this momentum thrust in price leading up to the current high. You can see that's when the MACD finally broke above it. You can see realistically there's no real reason to see the stock market continuing to go higher here and not entering a massive recession or crash until we start to see the MACD really with strength push its momentum above around 135, breaking above this yellow box that I have drawn on here. Let's go back to this 2 daily. Let's say we do get rejected from here. Next area to look out for is going to be losing 4,000, and then after that retesting around 3,700 to 3,900. And then I would say once we lose that, it's going to line up with moving, losing this long-term resistance going all the way back to January of this year, or not back, January of last year, 2022. And I think once we lose that again, especially if we lose it, let's say we come down, we lose this, we come back up, we retest it, and then we get rejected, that's going to essentially confirm this downside that I've been mentioning. The New York Stock Exchange is not looking good here at all. It's continuing just to go down here, not really seeing any major prominent bearish divergence outside of going back to December of 2022 to February of this year. We go to the RSI, you can see it went down from December of 2022 to February of 2023 right here. And we are also starting to now, as you can see, close and open below this range right here that I've had set. Previously only had this upper blue dotted line. Now I added this lower one to give more of a range instead. So it looks like we're likely getting rejected here. So once we do get rejected from here, I think that it's probably just going to be a straight downside movement to test this, again, this same long-term, what had been resistance. We've broken out above it so far recently, and we've come down and we've tested it twice right here, December of last year, March of this year. That lines up also with coming back down to this 800 EMA, which is where we touched right here for this double bottom, October, September of 2022. It's also going to line up with essentially that same price range around 13.3 thousand upwards towards 14,000. And then again, similar scenario here, would come down, maybe sit on it for a bit, come down, maybe when you test it, get rejected. So here for this NASDAQ chart, I've been mentioning this ascending triangle or this ascending wedge. We've broken out above it right now. You can see how heavily we've kind of somewhat ruined this bearish divergence I've been talking about. I'd still say it's still technically here because what I'm positing and proposing now here is assuming we're going to enter this recession, the stock market crash like I mentioned, this is likely a fake out until we start to, with volume support and with strength, break above this black box. I don't really see anything too much to look out for. What we would likely be seeing here is this fake out, and then we come back down, hit this same long-term resistance as I've got done going over on the previous two stock indices. Maybe we'll sit here for a little bit, come back down, retest it, get rejected, and just continue to go lower. But we can see we're still seeing this bearish divergence here on this MACD. As I've been mentioning recently, using this MACD, I've found that it's not whether it's bullish or bearish, the divergence is seen with this MACD. This one specifically isn't really too reliable a lot of times, although sometimes it is. So I just did want to point that out. Typically, I only use the RSI for divergences, whichever one it may be. Here quickly is an update for gold. As I got done mentioning, we are seeing bearish divergences. As you can see, continuing to set. It's similar to the NASDAQ. You can almost see like right here. We change the color of this. You can see almost just printing a rising triangle or rising wedge. If I called this an ascending triangle, I meant to say rising triangle or wedge, but likely once we start to lose, especially this right here going all the way back to this local high we set back here in January 23rd of this year, around 1900. It also would just line up with losing this white dotted trend line right here, which is what we've been bumping and finding support on since October last year. Also right here in March of 2023, clearly here, this 3-year resistance I've been pointing out, approximately 3-year resistance. I personally, again, just to reiterate, I do think gold's more likely to go down than it is to go towards the upside because of the more of the macro analysis that I went over recently on this as well. And once we do, I think we'll just kind of generally come back down to this area. Once we do lose 1500, I think that is then opening up the further affirmation to continue going towards the downside here. Here for silver, it's essentially the exact same thing. We have a longer term resistance here, approximately 12 years. We're also getting rejected here. The price harmonics looks kind of somewhat similar right here. Not necessarily, though. I'm not going to really kind of say that is a rising triangle or a rising wedge like I did for this previous two, but you can see we're getting rejected here. Once we start to lose $22 to $20, that's really going to start to affirm silver here for me, in my opinion. My personal outlook, you can see we're getting higher high right here, going back to December of last year to May of this year. Take a look at the RSI, we're getting the inverse, so still obviously, as I pointed out previously in the other videos, still continues to see bearish divergence here. I don't really see any reason why precious metals would be prosperous heading into a blockchain solution world, although I don't think that there's much time left in the world anyways, because if you're familiar with the whole Great Reset, the whole New World Order that's been talked about by politicians for many, many, many decades at this point, the plans of the higher up elites that are kind of puppeteering everything right now are not in the favor of the common man. So I just don't, even if blockchain solutions get adopted and how much promise they could possibly have, I just don't think the power lies in the right hands right now for a good outlook. Here for XYO, I've typically been going over XYO USD and XYO Bitcoin recently. I'm just going to be going over the USD chart. It recently saw a pretty decent, in quotes, decent pump recently. It's literally all just been within this current candle, which at most from its low to its high is 48%. Not too bad. As I mentioned in my previous video, for a lot of these altcoins that I've yet to come to yet, I think that there's a likelihood where we'll see some of these altcoins see a small up bump in price to kind of compensate for the fact if Bitcoin does go lower, these altcoins will move up a little bit to, like I said, compensate. So if these altcoins move up as Bitcoin continues to trickle down, this small bump in price towards the upside of these altcoins we'll see will kind of make up for the fact that they won't, go significantly lower than their previous lows, while Bitcoin's just losing a few $1,000s. Obviously, it's Bitcoin losing a few $1,000s is typically going to affect the altcoins in a more drastic manner. Not always, though, but sometimes, or maybe perhaps a lot of the times it does. But what I wanted to point out here, so this is the weekly of the XYO to USD. I just want to point out, if we go back here, so July of 2022, January of 2023, and then literally currently, as this uptick in price we've seen recently, you can see how we crossed above right here, crossed above right here, crossed above right here, and then also, just to point this out, in March of 2022 as well. These are each of the times going back to, like I said, March of 2022, where I've seen relief towards the upside in price. This first one, from the lowest to the highest, was 55, from about the medium low right here, 161%, right here, 228%. So at best, considering this isn't going to be the beginning of XYO's next bull market, let's say we move up 228% from this lowest low. That puts us all the way just shy of where I've been pointing out, a penny and a half to 2.5 pennies. So essentially meeting this red box that I've been pointing out for quite a long period of time at this point. But also the fact that this MACD has been building up since January of 2022. We're kind of reaching the end point, I believe, of this build-up, this consolidation, obviously oriented towards the upside consolidation, towards this 0 point, converging upon it until we finally see this break above. You can see the Bollinger Bands are very close together right now. The only other time to compare this to would be back here to October, November, December of last year. Also the way that the it moved in terms of the way it just looks similar, kind of making this W-esque formation, which also further validates perhaps seeing that 228, maybe even technically if I take it from this lowest wick, it was 252%. So let's say that happens again, 252 would still again just take us up towards approximately a penny and a half. And then also if we look at the stock RSI right here, where we had a high recently set, now we're coming down and we are in the mid-range. In the RSI specifically is at a value of 36, so roughly in the mid-range. The fact that this stock RSI is basically in this upper portion is a good thing to be seeing here. So if we, as long as we could go a little bit lower here, but as long as we stay within this rough upper range right here, not significantly losing this area back here of around 41 to around, I would say 36, then we could continue this positive acceleration, seeing this RSI continue towards the upside, seeing a major breakout of this MACD right here. Again, this is the weekly chart, so this is a very viable chart to be going off of right now. But if we look at these yellow trend lines I've had on here for quite some time as well, see, we haven't really broken it yet. We've had this massive wick above them, but is until we really start to see, obviously some more volume support than we've seen so far, which I don't have that on here currently, but seeing more volume support will be great to see. Seeing the candles finally, obviously open and close above this, more so this specific yellow trend line right here. That'll be good to see as well. But also the fact that we are seeing, you can see how the wicks are towards the upside and the downside are large, but the body of the candle is very thin. These are the Heikin-Ashi candles. So as a rule of thumb for Heikin-Ashi candles, whenever you start to see that happen, that typically means there's going to be some sort of relief in price, whether that's towards the downside or towards the upside. Just to further point that out, if we go back here, you can see we saw it March of 2022. We had a small bump. Same thing right here. Again, this lines up with these areas I pointed out down here with these pink bubble or pink dots on this RSI as well. We didn't really see one necessarily right here, December of 2022. But nonetheless, clearly you can see, and also right here, we saw the bodies thinning out. The wicks were rather large, and this time though we got obviously further downside, although this time, according to everything I got going over here for these indicators, also thinking back on what Bitcoin looks like, I personally have to say that this is, we may go a little bit lower. Let's say, at this point, obviously I don't know. I don't think it's going to end up going back below its lowest low, but if it does and it meets the trend line range it's met so far, worst case scenario, another 67%. That would likely line up with Bitcoin retesting its previous lows, or maybe even going lower, like I was mentioning earlier, to 12 to 10,000. Maybe even just 13 to 14,000, if not 12 to 10,000. But let's go here to this 2-day, just to take it down a notch on the time frame. You can see we are starting to. You can see how this candle obviously just got straight up rejected right here currently on that same trend line that I was mentioning and that I highlighted pink right there. We can see we're starting to, this candle we're currently on, which still has about a day and 17 hours left, is turning green. That's not really like a full confirmation that it's going to continue. Obviously, like I mentioned on that Bitcoin chart earlier, it's more of like buffer price. Obviously, you can see right here we were printing green, but we've all just continued to trend towards the downside here. But this, it could potentially mean that we'll print green right here, print maybe a few more greens, and then we'll start to print turquoise, which will denote that this RSI is really ramping up here. The stock RSI is going to ramp up as well. It'll, as you can see, we've been pretty much entrenched within this lower range. The stock RSI will build up to this upper range and stay within this rough upper range like it has so far with this rough down range, as it's been slowly going downside towards the downside here. But with this green trend line range, these dashed ones right here, representing where these candles double, almost really a triple top, really a double top, going back to right here, January. So within the month of January 5th to January 13th, we've wicked to it right here, starting from March to April of this year. We had a wick pretty much just right to it recently with this previous candle, began May 17th. So once we start to, obviously when you see volume support, etc., above 6 cents, but specific, not 6 cents, 0.0058 to 0.006, so just approximately half a penny. We start to see candles opening and closing above that. That will really be on this 2-day chart confirmation for that as well. Here for Phantom, like I mentioned in the previous video, perhaps Phantom will continue to come up here in the short term. Whether or not Bitcoin continues to go lower, like I mentioned earlier, that inverse correlation, etc. Maybe we'll come up here, we'll consolidate a little bit further this, and then we'll finally break out. But we are getting some sort of support right now. If we do break below this, so look out for, personally, I would be looking at 27 to 33 as price targets. If we lose that, then realistically I'd say it's just fair game all the way down to the lowest low. So I would say around 24 if we do lose that previous price range. So 24 cents down to its lowest low at 16 cents. And then breaking above right now, 48 to 50 cents also lines up with the 50 estimated moving average on this 2-day chart. Is important to look out for upside breakouts here in the near future. Here for JASMY, it's just still continuing to trade borderline sideways, slightly oriented towards the downside here. Looking out for 0.0034 to 0.0036 right now. Currently, if I were to be in this project, that's what I would be looking at. And then also, obviously, just possibly, even if Bitcoin doesn't go lower here, there's always a likelihood that we retest the lows. The absolute low down at 0.0028 with that, that wick all the way down to 0.0024. And then breaking above 0.0056 to 0.008 is going to be the next upside movement to see as well. And once, obviously, just to continue to reiterate, once we break above, you want to see volume support for that. I mean, if there's not much volume along with that, then it's not necessarily too trustworthy. But for the upside targets, I would say if it's a pipsqueak move, I mean, we could look at around 2 1/4, so 0.00 or 0.025 cents. This is also lining up with right here, our 50 EMA, this white estimated moving average. So around 0.0, we'll say approximately 2 cents, all the way up to approximately 8 cents. And then I would say once it breaks above that, then I mean, it's really free roaming towards its next all-time high, if it does indeed end up doing so. Here for TRIAS, we are, as you can see, we're getting support right here currently on this this white dash, so this median trend line. Any of you familiar with my content know that I've had this drawn in here for like almost going back to at least December of last year, and it's just been oscillating around this. You see, we slowly began to kind of gain the upper hand on this white trend line. So as long as we don't lose that at the $2.60 approximately that it's at right now, then especially don't lose $2.45 to $2.40, and then if we lose that, likely head towards $2.16 to $1.70. Let's say we lose that, the next day would be around $1.47 to $1.12. Then obviously, worst case scenario, we retest the lowest lows, 80 cents, or maybe we go even lower, let's say Bitcoin goes down to 10,000, etc. But let's say we bounce from here and break above $3. Look out for here. It's also going to be pushing it back above the 50 estimated moving average on this 2-day chart. And then for the breakout target, realistically, to kind of see another momentous move towards the upside, is just in terms of this ascending trend line. This green trend line range is going to line up with realistically just $4, and also just this previous local top we set on April 15th to April 17th. After that, then likely, like as I mentioned, around $5.50 to around $11-12 would probably be the next area it would push to. Maybe it blows straight through that. Again, at the end of the day, who knows exactly how this is going to do. I mean, it's just as likely it comes up and consolidates, for a little bit in this area. Maybe it comes up, does something like this, and then it finally goes crazy. Or maybe it does something like this, and then like I said, say many times, I could draw an infinite amount of paths on here. It's only going to take one of them. It's really kind of pointless to project anything specific unless it's Bitcoin. Bitcoin is the only exception, and a few altcoins that I go over, but Bitcoin is just obviously been around the longest, and it shows clear patterns at the end of the day. But here for Dogecoin, again, presented here as the same macro price pattern, price trending that I've been pointing out for many months at this point. Going back to our yellow blob or our yellow circle highlight here, current yellow highlight. We've seen a bounce here recently. If I zoom in here, so again, it's realistically the same thing as the last video. We don't need to see movement below 7 to 6. So 7 cents down to 0.068, just shy of 7 cents. If we do, let's say we do end up losing this blue trend line range that I do have drawn on here, then either we'll retest the lowest low at around or the current, or the most previous lowest low, 0.048 to be precise. Maybe we'd even see some wicks down to around 4 cents on the dot, lining up with our 800 EMA. Let's say Bitcoin does go a little bit further down to the downside, 20,000, maybe. Yeah, if Bitcoin goes to 13, 12, 10,000, then Dogecoin's probably going to go. I would argue that it might even drop down to 0.0083. But again, like I said, I don't personally see those. I don't see that as the most likely route for Bitcoin or even realistic. So I don't see these altcoins doing that as well. But at the end of the day, a lot of people think Dogecoin's stupid. It's a meme coin, etc. So nobody think it really is going to do anything. Although I beg to differ personally if you're familiar with my content. But to look out for upside targets here, breaking above, so it's the same thing I've been going over recently. Generally just 10 cents will be good to look out for. It could likely get stuck in around 12 to 14, 15 cents for a little bit. Perhaps it'll blow straight through that. But I do think 20 to 32 cents will be a likely consolidation range. Like, for example, if it will let me do so, let's say we do... let's do this. It's not going to let me because my internet's being stupid right now, but it's not going to let me draw either. Anyways, so let's say if we carry out similar to after this yellow circle back here, let's say we move up. Can I take a... I can do that. Let's say it was about 350% there. If we do the same thing here, 350%, that takes us up to, like I said, 28. So that 20 to 32 cent range, as I think I mentioned recently, I think that's probably more probable at this point, given the fact that if we go back to October of 2022, we've already kind of encroached upon this 11 to around 14, 15 cent range. So I would see it as more of a likelihood that we would just probably on the next movement towards the upside here, go ahead and enter around 17 to, like I said, so around approximately 20 to approximately 32 cents. And then continue to go higher from there. Here for CRU, it's essentially still the same as the previous video. Still kind of adhering to this yellow dash trendline range. Price target wise, we're looking at around 69 to 79 cents to retest. If we lose that, then it's essentially retesting its previous lowest lows, and it could likely go lower. But just to reiterate, likely only if Bitcoin is, dumping on us majorly again. Or at the end of the day, this altcoin could not do anything leading into the next bull market, and it may end up dying off. Who knows? But looking for upside targets here, around $1.14 to $1.30 will be very important to break in the near future. Here for Algorand, it's still just continuing to trade in this yellow box, as I mentioned in the previous update for these altcoins. So nothing really too special to go over here. Still the same upside targets are projected around 18 to 20 cents. Once we break that, that will be the, especially, volume support, etc. It will be the first break that Algorand will see here of this macro resistance going all the way back to September of 2021. As I mentioned, again, just to reiterate, 31 to 44 cents likely. We could probably get us some consolidation there. Let's say we move up, center like this for a little bit. Then we move up to this range of around 74 to $1 in price, and then consolidate there, obviously. And then we'll continue to break out even higher. We could also likely see some consolidation from around $1.50 to $2.50, lining up the previous all-time highs. Here for MATIC, overall it's still looking pretty good. You can see we're meeting the same support range going all the way back to September 2022. Whether or not Bitcoin goes lower or it goes higher, that's going to really dictate the ultimatum here. But let's say we come down and retest this macro. What was resistance? We haven't really solidly flipped it in support outside of this wick going all the way back to March 10th of this year. So, I mean, let's say we come down and we test it more so at around 75 cents, reaching the bottom of this black box, and we momentarily lose this ascending red trend line range. We'll see that maybe as a fake out. But worst case scenario, we come down to around 60, so 70 cents to 56 cents. Finds the support there. I would also generally kind of just line up with retesting this macro, what was resistance as well, depending upon how rapid this downside movement would be, or how if maybe it would be rapid or a slow bleed. If it's slow bleed, it would likely line up with this. Like I said, we'll meet this macro resistance while we're meeting this blue box as well. But towards the upside, breaking $1.17 to $1.26. And then after we break that, we could likely move towards $1.36 to $2, sit there for a little bit, and then finally enter the next bull run, breaking the previous all-time highs, or maybe we'll just blow right through everything I just mentioned. Again, just to reiterate, volume support is what we need to be seeing here for everything. Here for Digibyte, we're still within this ellipse here, which is good to see. We are still straddling our major macro. What was resistance? It's essentially been flipped in support at this point. I don't believe the rest of this is going to load, although it's not really that big of a deal. It's not much of an update as opposed to the last update I added for this coin, but it's already essentially, I mean, you could say at its previous absolute low of 0.006. So, I mean, Digibyte, as I mentioned in the past, seems to kind of be stagnating. It doesn't really seem like a project a lot of people are in. And it also kind of just seems kind of like a competitor to Bitcoin and kind of just being like it's like a store of value, just kind of like a currency in a way. It doesn't really seem to offer anything special outside of those utilization cases. So, I mean, whether or not it continues to kind of, go flat line in terms of its all-time highs and have an overall, over the next like decade or so, downward trajectory. You can still make money off it. Obviously, it's going to have its upswings, but overall, it's not going to be insanely explosive like a lot of more promising projects. But the same upside target's still staying here for Digibyte, so around 0.009. So 1 cent pretty much would be the next upside area to look out for, going all the way up to really breaking into 2 to 3 cents, and then breaking into 4 to 7 cents is really the next price target range I would be looking out for if I was personally in this coin. But since my internet keeps dying on me, that does wrap up essentially everything that I wanted to touch on in this video. So hopefully you guys enjoyed the content. Hopefully you're able to learn something, take away something from this to apply to your own trading scheme. All of that being said, I hope you all have a blessed day.
Ooh, I'm regretting now.